It's about that time of day again. My name is Joseph. It's Tuesday evening, March the 14th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish after today's API report erased the entire move lower this morning. And this strong spike higher tells us to watch for 4 specific scenarios tomorrow. The S&P is bullish, but we have 2 big clues and 1 major level of resistance that will give us opportunities to play both sides of the market tomorrow. The only question on the E-mini is what the conditions will look like ahead of the FOMC report early tomorrow afternoon. Gold is bearish, one of those markets that will be highly susceptible to the FOMC tomorrow, but looking closer at the market's context this evening shows gold is right about the pendulum swing completion. So we're looking for failures and a move back up tomorrow morning. The euro's bearish, but sitting at multiple levels of support all the way at the low of a channel is telling us to stay patient and find opportunities to sell high on Wednesday. The FDAX is range bound, and with price sitting at the high of the range, we're looking for a fake out breakout pullback or a trap low to finish off a measured move tomorrow. Boy, oh boy, we get a big day tomorrow. We got Fed Day, Election Day, Inventory Day, IEA reports coming out tomorrow. The list goes on and on and on. And of course, as we do every evening, plenty of reliable trading opportunities if the market conditions line up for us. Boy, I have another great newsletter in store for you guys tonight. Before we dive into those charts, though, I do want to remind you, the only place to watch the full-length version of this newsletter video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small snippet of the entire video on YouTube, right? Check the description. There's a link in that description of the YouTube video. Follow that link and come join me on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. I'm always posting important charts, updates, and articles throughout the day. Right below the video, you can download today's charts. Grab that download by following that link and have all the charts from tonight's video on your computer for tomorrow. And please don't forget to grab your free pass. If you're not an advanced member here at School of Trade, I'm going to give you guys more information in 90 minutes than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass if you're not a member here at School of Trade. And please don't forget, we get a great frequently asked questions page for all the new folks here. And I'm always here standing by to answer all your questions 24/7, 365. Hope you guys are having a great week here so far. Don't forget, it is that quadruple witching week, that 3rd week of the month of March. As we get closer and closer to Friday, we do expect the volatility to keep kicking up, as well as the overall volume, right, dropping as we get closer to that Friday quadruple witching. We talked about this last night on the newsletter. We went into more detail last night. If you missed last night's newsletter, go back and make sure you watch that tonight for some homework and learn more about the 3rd week of every 3 months, right? March, June, September, December, right? Talk about quadruple witching. We teach that stuff in our beginner class. Looking at the news here for tomorrow, we've got the FOMC announcement, right, coming out tomorrow afternoon. We talked about this last night, right? Today was the meeting begins today. A very highly anticipated FOMC meeting began today. We'll have the announcement tomorrow at 2 p.m. Eastern Time. Now, when it comes to the announcement at 2 p.m. Eastern Time, it's very much like Draghi's announcement at the ECB. There'll be the initial announcement, and then about 15, 20 minutes later, right, they'll get peppered with live Q&A at the press conference. It really is a real dangerous environment trying to trade ahead of and after the FOMC announcement. This is one of those big news events that, we only get a couple of these every few months. This is one of them where you really want to be careful tomorrow. It'll be low volume ahead of that news, and it will be incredibly high volatility after the news comes out. My best advice for you tomorrow is, tomorrow's not the day to go increasing contract size, position size. Tomorrow's not the day to be moving from your simulator to your live account. Tomorrow's not the day to be trying out a new strategy, right? Tomorrow is a day to protect. Usually on Fed Day, it's about 10:30, 10:45, 11 a.m. Eastern Time, and we start seeing volume really start drop as traders have no choice but getting out of positions ahead of the lunch hour, right? 11 o'clock, 12 o'clock Eastern Time, because nobody wants to get caught with open position ahead of the FOMC announcement tomorrow at 2 p.m. So I always recommend on Fed Day, right, make it a half day, right, out before 11 o'clock tomorrow morning on Wednesday. Let the news announcement come out and come back and trade, right, on Thursday with a fresh slate. It's going to be very, very difficult to find any good volume ahead of the news tomorrow, and of course, it'll be very difficult to find any reliability. You're more than welcome to gamble, but I wouldn't recommend it. It's extremely volatile after those news numbers come out. As I always remind you guys, these big news events, they don't happen very often every month, right? We have to simply protect our capital during those times of the month. What else do we have tomorrow? We get some major news here. We got the elections kicking off. Our good friends in the Netherlands, very, very exciting time if you follow the European election schedule, the first of many, many elections in the year 2017. Lots of stuff we expect to be happening in Europe as we start seeing polls come out tomorrow morning and tomorrow afternoon in the London session. What else we got here tomorrow? Outside of that, we've got, again, 5 a.m. for the retail sales in Italy. We're going to see the labor market report there tomorrow morning at 5:30 a.m. I would imagine, right, these will all probably take a back seat we start seeing from, right, the Dutch elections tomorrow morning. Just kind of knowing kind of the implications of how this election goes, I would expect there to be quite a few heads and eyeballs watching that election results as we go into tomorrow. Tough to tell how much that CPI and the labor market report will move things around, but that's tomorrow morning at 5 o'clock and 5:30 a.m. Now, sometime between 6 and 8 a.m. tomorrow, is the monthly IEA report. Now, usually this will kick up some extra volatility for markets such as crude oil and natural gas, right? Obviously, our focus is crude oil for this report, right? But again, tomorrow being the 15th of the month, usually the day and the day after are usually going to be some real volatile times. So we're expecting to see some great movement tomorrow on crude oil coming out of that IEA report. I couldn't tell you what direction, but do expect there to be a kick up, right, of some volatility here tomorrow. And again, usually that number comes out sometime between 6 a.m. and 7 a.m. It's always a little bit of hit or miss by the time everybody picks up on it. The news can come out whenever it wants, right? But it's when everybody picks up on it, that's when the things start really moving. So we usually see this market really moving well by the time we get in at 8 o'clock Eastern time in our trade room here at School of Trade. So be aware of that, right? The IEA oil market report tomorrow is due out. And you can go right to their website at the IEA. If you Google search IEA report, I'll put a link here below the video here to give you guys the link to that calendar. So check the link below the video. I'll put it right in the text. That'll take you to a link where you can see the schedule of all the IEA reports. Come out once a month, right? They kind of rotate between the days each month, right? But they are once a month. And they do. Again, I couldn't tell you what direction we're going to get off it, but I will tell you, though, around the day of the report and the day after the report, you do typically see, right, some pretty volatile reactions to it. Outside of that, right, we talk about quad witching, we talk about Fed, we talk about the Dutch elections tomorrow, right? We're definitely, we got more though. We got more here. We got some big news tomorrow morning at 8:30 a.m. We're going to see CPI, we're going to see retail sales. Obviously, retail sales are pretty much the headlining number for us tomorrow morning. We've seen a lot of really lackluster reports from the retail sector here in the U.S., the old Amazon effect happening to everybody right now. So we're interested to see how that number comes out tomorrow. We got some minor news there at 10 o'clock. I'm not going to worry too much about the business inventories and the housing market index. But then, of course, we get that big news number for crude oil at 10:30 a.m. Eastern time tomorrow, right? And, of course, don't forget, I always give it at least 15 minutes ahead and then at least 10 minutes after, right? So 10:40 a.m. Eastern time. So 15 minutes ahead, 10 minutes after. Don't forget, we do this with all of our students every day in real time in our trade room. Come out and join me, and we'll do it together, right? I'll walk you through the whole process tomorrow as we go through it. So really, tomorrow is a pretty busy day. As I said earlier this week in the newsletter, right, we got the elections tomorrow, we got Fed Day tomorrow, we got inventories for crude tomorrow, we got the IEA report coming out tomorrow. Anything else I missed? Yeah, Wednesday, of course, Thursday and Friday, we start going into the quadruple witching. Busy busy third week of the month. It'll be really nice to get this Fed announcement out of the way tomorrow and then go into Thursday and Friday. And again, hopefully we'll get some great volatility around the election, around the news on crude, and ahead of that FOMC announcement tomorrow. Don't forget, we'll be in the trade room tomorrow morning at 8 o'clock Eastern Time. You don't have to do all this alone. Come out and join me as an advanced member here at School of Trade. How about some crude? We'll go crude, S&P, gold, euro, FDAX. Crude is obviously bullish after this darn API report with a strong spike higher this evening, which has ultimately taken back everything from the news from Saudi Arabia earlier this morning, right? Market tumbled lower when, of course, a little slip of the tongue from the Saudis this morning, right? Apparently confessed to cheating on the production cuts. Are we surprised, right? Are we surprised? The bottom line, though, is this spike higher, right? This spike higher took back all that move. This is very common. This is very common. Anytime we hear from OPEC, market moves and shakes, then it usually comes right back to where it came from. This spike higher, though, is a big clue. It reminds us to look for a spike in channel, a spike in range, a spike in wedge, or a possible flag pattern tomorrow. Right now, the most important thing to remember is to avoid chasing this move and buying high. The first pullback is going to tell us a lot about where we go from here, and we'll be keeping an eye on a possible reversal in the overnight session because we have inventory news tomorrow. And we know it's very common as we head into inventories to see a complete reversal. So we really have kind of 5 scenarios, really 4, but almost 5 that we'll be looking here for tomorrow. Now, you'll notice here, again, I'm going to link up below the video tonight. I'll link that. I'll put a link out there for the IEA calendar for you guys. That'll happen once a month. But every Wednesday, well, every Tuesday afternoon, we hear from the API report. I'm going to put these levels below the video as well, right? That way you can copy and paste them and we have them ready for your day tomorrow. But the inventory levels, I didn't put them on the chart tonight. I was a little bit late on time here tonight, but I did want to make sure you are aware of some these are obviously short-term support and resistance levels tomorrow. I always make sure I'm not trading directly into them, right, when I get into my trades on that Wednesday. So inventory levels for Wednesday, 34, 92, 50, 08, 66, 24, right? Go ahead and plot those on your chart tomorrow, right? We'll do that together with all of our students tomorrow morning, 8 o'clock Eastern Time. So we are ready. Make sure you are ready, though, as well. With that said, right, we'll add those on separately tomorrow. Most important clue right now is this big spike higher. This spike higher, it's not that surprising considering the fact that we got this move lower today off of OPEC news, right? Move higher is just pretty much getting us right back to where we were before the news came out. With that said, anytime we see a real strong spike higher, we know, right, we're looking for pretty much one of 4 scenarios, right? Spike in channel, right? Pull back, new higher high, buy the trap low, right? We know that we're looking at a possible spike and range, right? Or let's say spike and wedge, kind of keep this consistent here, right? Spike and wedges are very similar to spike and channels, trap low, buy high, right? Or sorry, trap low, right? Buy low to go back to the high. A spike in range. Spike in ranges could be a form of a range, right? Double tops and double bottoms, or it could also be in the form of a triangle, right? A spike in triangle also works too as a range. Most important thing about a spike in range is to trap low, right, and buy it back up. And then, of course, you have the most difficult one, which I think is the flag pattern, right? Spike up, bear channel coming down. Yes, bear channel coming down. And the idea here is to buy the low of that channel. Buy the low of that channel for a move going higher. So spike in channel, right? Spike in channel happens and we see a pullback and a new higher high. That new higher high gives us those levels now to watch to buy low, right? A spike in wedge has a new higher high, but it doesn't quite fit into the mold of a spike in channel, right? So it tends to trap low, allowing us, right, to buy low as well. Spike in ranges, spike in triangles, right? Again, it might be a double top, double bottom range, right? It may also be a triangle. It all depends on what we get here tomorrow. Bottom line is, much like most of these things, it tells us to buy below that low. The hard part, obviously, is the flag. The flag always makes it a little more difficult. Really, what you're trying to do here is trying to grab those scalps, right, at the low and leave a target for a big measured move, right? The measured move is usually going to be the big reward, right, at the end of all the work on that flag pattern. Now, we oftentimes also see, right, those are 4 scenarios to consider. We oftentimes see ahead of inventories a real strong move up. The buyers can't quite hold it, and it runs. The one thing you want to be keeping an eye out for tomorrow is the difference between these two scenarios on crude oil. Again, ahead of inventories, we oftentimes see a big full reversal ahead of inventories just to get it bought right back up again. Here are two scenarios you want to be watching for tomorrow if you are trying to pick or trying to identify a market that is reversing. As the market pulls back, right, it'll grind before retesting that high, right? It's called a flag pattern right before it retests that high. That is a pullback, not a reversal. The reversal